Hi everyone, my name is Chris Tubby. I'm founder of Trading for Tomorrow. I'm just going to go through my macro outlook and then do some technical analysis on a few of the products that I trade. So I hope you enjoy it. Okay, so let's start with what happened last week. So of course US data was positive, GDP was revised higher, consumer sentiment was at 5-month highs. Of course the rate cuts would have helped that. And PCE hinted on Friday that inflation will hit 2% early next year. The only negative I can see in the US at the moment, obviously you've got to watch the jobs data that's coming out this week, but is that dock workers may strike, which could impact supply chains. So the Dow and the S&P made new highs. However, the Nasdaq was not so lucky, and I think that's probably just because investors are holding back a little bit on AI and tech to invest in other sectors as they rebalance. And of course, all the AI stuff has gone up so high in price that perhaps people just think it's too expensive at the moment. Now, I think price has just, as I say, become a bit of a deterrent for the whole of the tech sector. So the dollar continues to struggle. Currency traders remain focused on yields rather than economic conditions. And that, it's not that it surprises me, it's just that it's such a short-term view rather than a longer-term view, but I guess most people are trading it short-term. Bitcoin had a really good week. I mean, finishing at the week's highs, breaking 66,000. And of course, we can't not mention gold. Gold hit yet another record high, touched 2683. And I just wonder if there's anything to do this week with being Chinese Golden Week as well. So maybe. And I don't know if you know, but you can get like these little golden nuggets that like coffee beans really, and they give them to each other as presents. So again, all of that, if that becomes a real sort of in demand, I mean that can again just keep that demand for gold there without everything else that's already there. The yen also firmed, that was with Ishiba being selected as its next leader in Japan, and of course he's in favour of gradual tightening. Now the Tenkan survey is released this week, so keep an eye out for that. There's a lot of data coming out from Asia and other countries this week, so I'm not going to list it all, so you just need to look at the economic calendar for all of that. Now WTI early in the week hit $72 before dropping almost $5. However, it did close at 68.86 on Friday. Remember, that's the futures. And I think that a little bit of that was anticipation of the Middle East action, which was definitely the case with Israel and Hezbollah exchanging attacks. And of course now Iran is wanting revenge after Israel killed the Hezbollah supreme leader in Lebanon. Hezbollah rockets are now forcing parts of northern Israel to be evacuated. Now the other thing here is there's so many Israeli troops and tanks on the border that all I can see is that they're getting ready to actually cross into Lebanon very soon. And then the question's going to be, what will Iran do? But just going back, so northern Israel was having quite a lot of an attack on that as well, and parts of that had to be evacuated. So again, all of that could lead, all this unrest and the fact that it could escalate quite a lot, that oil could spike at the opening and stay steady all week. But just remember, that's just my view. Right, so the Fed was right to cut by a 50 basis points as far as I'm concerned. I did warn of that. I've been saying that for weeks, if not months, that was going to happen. But for me now, that leaves the ECB and the Bank of England behind the curve. The US economy remains stronger. The UK economy is faring okay, and it's better than the Eurozone at the moment, for sure. And now, for me, I just can't see they have any other choice but than to cut at their next meetings. Uh, that said, I expect the Fed to cut at the next meeting as well. I think I see them of having two more 25 basis point cuts in their final two meetings of this year. So I must admit, I just feel that the dollar is a little bit undervalued, and it's being penalised for actually having the better economy, which is strange. But there it is. That's modern macroeconomics for you these days. So although all the signs of inflation being back under control, uh, I'm just wondering if China's stimulus that's been announced this week, there's a lot of, they're obviously trying to stimulate demand, and whether that's going to prevent inflation dropping any more, if that sort of feeds out into the global economy. So, they've done a lot of stimulus that's aimed at boosting their struggling economy, including fiscal support for the property sector, plus, of course, some short-term rate cuts. They've dropped the minimum deposit required for a property. Chinese banks will be recapitalised. And, of course, all of that gave metals a big boost, as well as, obviously, the branded stocks, because, the Chinese do love to buy brands. And China is creating a new fund to support the Chinese stock market, which makes me just wonder if that's sort of their version of the Fed, maybe. Okay, so what else is happening in France? Inflation is only running at 1.5%, and in Spain 1.7% now, which for me is a little bit concerning, because maybe the consumer demand has dropped a little bit too fast. In Germany, we've seen unemployment rise, and PMIs around are dropping as well, which again adds to my point that the ECB, after taking its first step, and then paused when, in my mind, they needed to cut again. Now, the US election will soon be here, and the polls show it is going to be pretty tight. But of course, that's if you take notice of any polls. I'm not really sure. Harris does say a few things that make sense, but Trump is so good for the markets. Same with the US, there's a hurricane out there which is causing damage to the southeastern part of the US. Now, Visa or MasterCard may have its own storm to navigate, with Europe allowing these sort of direct cross-border payments from bank accounts. This is for consumers when they're buying things, which is removing the need for them to pay by either, obviously, Visa or MasterCard. Now, I just wonder if this could cause other countries to follow suit, which is going to be obviously negative for Visa or MasterCard. They've had it their own way for so long. Now, while I'm back talking about Europe, so German car makers have issued profit warnings. That's all of them right across the board. France has a higher debt to GDP ratio now than Portugal. And of course that weak French government has pushed bond yields higher now than those of Spain and Portugal. So moving on to Ukraine, it's in danger of once again lacking those military supplies, especially the key weapons that they need for next year. And a lot of this is due to sort of funding issues from its Western allies. Now, if that happens, we could go back to probably about a year ago, when sort of support, the financial support was definitely slow in coming, which did allow Russia to advance, and maybe that's going to be the case again. Now, my main focus this week is going to be US jobs, but because I'm trading oil as well as many products, I will keep an eye out for any news regarding what's going on with Israel, Hezbollah, Iran, etc. in the Middle East, because that tension is going to rise, not subside. Okay, so I hope you enjoyed this. You should go on my website. There's loads of free like trading tips and everything there. And there's another couple of slides to come up, and then I'm going to go on and start talking about the charts and some of the products that I trade. I was in London on Friday. I was given a couple of presentations at the IX Trader event that went really, really well. The biggest crowds that I've ever seen. And it's such a great event that all I can see is them just growing on every 6 months, which is how often they hold those. So anyway, that's great, and I hope that you'll stay with me for the technical analysis. As I say, it's just 2 more slides to come first.
Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Uh, Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1 week intensive course, that's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And, this is to help you reach that next level time and again. And, I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.